Welcome to the Daily Report. The stakes have never been higher in the intensifying trade war between the United States and China, a clash poised to reshape the future of global business and economics. This week, we examine how the world's two largest economies, locked in a high-stakes showdown, are edging closer to a perilous decoupling. At the center of this economic standoff lie high-tech products, particularly Chinese electronics. Despite temporary exemptions, President Donald Trump has made his position clear. More tariffs are on the horizon, and the tech industry is bracing for a serious impact. Yet amid the trade turbulence, there's a rare glimmer of unity elsewhere. In a landmark move, global nations have agreed to tackle one of the most persistent contributors to climate change, international shipping. A new deal will impose carbon fees on polluting vessels, but critics question whether it's ambitious enough to steer the industry toward truly sustainable practices. The numbers paint a stark picture. $640 billion. That's the annual value of U.S.-China trade now hanging in the balance. A full-blown breakdown could send economic shockwaves across the globe. While the U.S. doubles down on aggressive negotiations, China is not standing idle. It's reinforcing ties with Europe and Southeast Asia, regions also reeling from Washington's tariff pressure. The question now: is a diplomatic breakthrough still possible, or are we heading toward full-scale economic fragmentation? China's charm offensive is in full swing. From Hanoi to Brussels, Beijing is casting itself as a champion of multilateral trade, even as old tensions, like the European Union's $300 billion trade deficit with China, simmer below the surface. Meanwhile, the tech world is on edge. Exemptions for smartphones and laptops offered a temporary reprieve, but now the White House has shifted focus to semiconductors, citing national security. For American tech firms reliant on Chinese manufacturing, the costs are rising, and consumers may soon feel the squeeze. Markets are already reacting. A sudden sell-off in U.S. Treasuries has sent bond yields soaring, signaling investor anxiety. If interest rates continue to climb, it could mean pricier mortgages, loans, and credit cards. In South America, Argentina is turning heads. President Javier Milei has lifted strict capital controls in a bold bid tied to a $20 billion IMF bailout. But economists remain split on whether the gamble will stabilize or further strain the country's fragile economy. And in a rare win for climate diplomacy, the International Maritime Organization has reached a deal to tax shipping emissions beginning in 2028. But for small island nations already facing rising seas, the plan may be too little, too late. As the global trade map is redrawn, one thing is clear: the world economy stands at a crossroads. The decisions made today will reverberate for generations. Please like and subscribe.